Happy Friday. Happy trading. Nothing I'd rather be doing on this Friday than trading. Let's go over our trades for the day. Our first trade of the day was Uber. And we saw a nothing to the left. Nothing to the left. So we got in. And we looked at it and we were like, hey, wait a second. This is pretty far from the 20 or the 200. This is way far away from the 20. And it's pretty far away from the 8. So we didn't feel like that was a good trade, especially when it went down like that. That was a green bar and it went red. So we got out of that quickly. Really, we should have held it until about here, but we just felt that wasn't a good trade. So we lost on that trade. But if you look at it, let's say the 5-minute, that could have been a bull 180. And you could have rode that down. Or even, hey, green bar takeout right here. Rode that down right there. This right here, that alphabet would be, hey, you're going to go up and you're on the 200. So what's up is the real question. And it could just be like, hey, we're just not going to go below the 200. That's support. But here's what the good part is. Now you have a flat 20 and you have a flat 200. So with that being the case, we're going to look for the elephant bar here or the elephant bar here to buy into and get a big move. So waiting for the move. We think we get it right here. So we buy into it large and it erases on us immediately. It goes about 3/4 and then we get some red, so we get out of it pretty soon. Then it goes the opposite way. And then nothing happens there, and then it goes the opposite way. But then nothing, and then the green bar erases that. So we don't get into it because it's not like a minute 30. So we're just like, oh, didn't have to waste our money on that one. But then we get a solid bar here. When we're not looking at it anymore, we get a bull 180 right here. 80%, so maybe it's going to go down on that one. Nope, nothing there. And it's just playing around this flat zone. And finally we get an elephant bar right here off of it. And what's that do? Boom. There's the 3 pushes. Could have got out there. Keep in mind what you could do is it hasn't really, at this point it's established that the 8, it makes it seem as if the 8 is the part of pushing off of right here. So if you go here, you're like, hey, 2 within the 8, so you could get out. But if you see this right here, you have another green bar takeout. And you're still going down on the 20. So you could get in right there, set the stop right there, take a little bit more. You get a whole nother move. A big move too. And that was also reacting off of the 8. So 2 moves within the 8, you get out right there. And by that time we're at 15. Here we have a elephant bar off of a 20, so you could get in there. What we did is we missed that, but we saw the green bar take out the red bar. We got in here, set the stop below the red bar. It pumped all the way here. We got out here. Had we not have got out there, it ended up going even further. Had a pull back to the 8 and then bounced back all the way even higher. So we could have been a little bit more patient on that one. We got paid out a little bit more, but time versus how much you take out. Sorry about that. Next stock we took was Merck. Merck, we saw the elephant bar, well, let's say Fab 4 right here. We saw an elephant bar right here with nothing to the left. And we knew to get in, so we got in right there. It's going down, it's going down, it's going down. We get out here, and we get out here. Turns out it could have went a little bit further, about twice as far. But we were just P&L watching, something we are just working on getting out of. But for now, that's what we did, and that's why we got out of it. Also, it was close to the 200 on the 5 minute, so that was just something that we were worried about. But it pulled back, and it should pull back, and then it gave us a buy sign right here. Keep in mind this was all green, and then it turned black, so that's a red bar right here. So that's really a red bar takeout for the most part. Sell, set to stop. You could say new low, take profit right here, especially with that being a tail bar. This tail bar, that alphabet lets you know that it's going to try to go up. How does it go up? It's going up, it's going up. We get a bear 180 right here, but keep in mind what's the location of this. It's right here. So I don't know how we really consider that. We could say, hey, I don't know about that. That's pretty much flat. With it being flat, you have no real moves. Now it looks like it is going down a little bit. So let's say it's angled here. What you could say is red bar takeout of this green bar, red bar takeout of this green bar, red takeout of this green bar, red takeout of this green bar. Write it down. What we ended up doing is we saw a bull 180 right here, and then we got a big red bar and it went below it, so we got out. But as you can tell, as soon as we got out later on, we made a big move up, so we were just a little early. Next stock is C. So C, looking at elephant bar, perfect position right here. You sell into that, goes down, gets some resistance on the 200, which is understandable, and then off the 200 you get a right here, you get a bear 180 or a bull 180. So you want to play that up, set the stop. It goes down off the 200, tail bar, and a green bar takeout. Add right there, ride that up, maybe ride that to previous day close. That's probably going to be a resistance point. What we ended up doing is we had position of power right here, and then we had a bear 180 or a bull 180. No, Yeah, bull 180. Bull 180. So we thought it was going to go up, but it went against us. Well, we bought this bull 180, right? And then we set our stop right here. But then we added on this second one, and then we changed our stop to here. Then this went down and it got to this stop, so we got out of both. Had we not added on that second one, we still would have had this one, and we would have got this move, which isn't a good move, but it would have been more profitable than what we were doing. So it just says be careful on those ads, or taking considering. Had I not taken everything out on that ad and only taken half out when it got to this point, or the point that I added right here, then I still would have had a positive trade, or I would have at least zero summed it out. And that just would have been better overall for my P&L. So now we have if you look at this, we have a elephant bar off of a 20, off of a previous day's close. You set the stop, ride it. Now you have a clear the green bar, set the stop on an ad, ride that down, and you're knocking out a nice little trade right there. Now you're looking at a position of power right here. You might want to try to play that down right here. You get a nice move, but then it stops with a tail bar right here. You would expect more move downward, but you don't get it. That might be an indicator of a reversal. You get a tail bar right here. Set the stop. And if you didn't catch that, green bar, take out red bar, set the stop. Green bar, take out red bar, set the stop. Take all that. Then you're in a position of power right here. These you can just throw a pebble and usually it'll go up. Then we got in this right here. We saw an elephant bar. We said sell. And we saw this flat 200, so we got out when it hit the flat 200. What we shouldn't have, we should have just used the 8 as like a 2-bar stop to get out. But we used the flat 200 just because we did. And it was a nice little profit, but had we not done that, it went down a lot farther for the rest of the day. Next stock's going to be XOM. XOM, you're looking at it. You're looking at it like, hey, Fab 4. You get a bear 180 right here. You set the stop right here. It goes down. It goes down. And then you get a move off the 20. Set the stop. It goes down. Goes down. Goes down. Now you'd have to be pretty aware. It bounced off the 20. So I would say 2 bars in, you get out here. Keep in mind this is a pretty large move, maybe. Set a stop right here. What I ended up doing is I saw this right here as a bull 180. Set the stop. It went against us right here, so I got out. But as you can tell, Had I held it a little bit longer, maybe had a two stop rule, it went up a little bit, but it wasn't a significant amount. Now, that's a 20 MA halt. It went, well, it was above this for a significant amount of time. Then it goes below it. Then it halts at the 20. It goes down. Let's say you did the color change here, set the stop. Probably would have got out there, so it wouldn't have been too good of a move. This is towards the end of the day, but it's a wide state. Elephant bar compared to the past 20. Takes out all this, set the stop. I guess you could look at it like, hey, 200's acting like a 20. Going down. Take that out. Next, we didn't trade Walmart, but the way Walmart looked, Fab 4 right here. Wouldn't know what to do on this bar. This, nothing to the left. You might sell here, but even if you sold here, you're pretty far away. So right now you get that bear 180, but you're not in a good, or bull 180, but you're not in a good location. You're under the 200. This is where you'd want the opposite. You want a bear 180. So you just look for the sell opportunity here. The sell opportunity is right there where the red bar takes out the green bar, and then you just make that sell. Let it go down. And you would get out here on the 2-bar break rule because it was respecting the 8 right there. Now you have a flat 20. Don't know what to do. Wait for it to react one way or the other. Looks like it wanted to go down. You'd look for an opportunity to get in. You could have a green bar takeout right here, or a green bar takeout right here around the 8. See if you can get anything else additional to go down. Looks like not. Seems to be a wide state. Maybe you'd play it up. No, it looks like it wants to go down again. Nope. End of the day. Next one, we would do Intel. Intel. You're looking at Fab 4. Probably would avoid this. I mean, you should avoid this because you should avoid the Fab 4, but I would just take this because this is a tail bar off of a 200. And knowing it's a tail bar off of 200, you could just ride that up. But let's say you did want to avoid it because it's within the Fab 4. You could just see that this is a green bar takeout right on the previous close. That can be taken as the 200. Then you get that nice little move right up here. Now it's been flat for a while. You get a bear 180 right here. You might want to set the stop here. Ride that down. Probably get out here on the 2-bar break. It's flat again. Maybe it broke up right here. Set the stop. Get out. Bear 180. Set the stop. Right here. Elephant bar. Nothing to the left. You lose 8 out of 10. You just accept that you lost, or 2 out of 10. And with it going against that, when that's something you should win, you would take the reversal. So, and you'd make up your loss. So that's how I would trade a lot, and that's what we traded. Had a dentist appointment, and we slept through the second part of the market for today. So we'll find out next week if we figured everything out. But things are seeming a lot clearer, and I'm enjoying my market play. So till next week, it's going to be a big week.